to where we were talking about before, Kooky. Like,
Yep.
it's, the RBA's mandate is often referred to as a blunt instrument. We get all that.
Yep.
But in terms of being hawkish, I guess they've got to put blinkers on and not think about who's actually suffering. I mean, you and I are sort of sitting here worried about mortgage holders, etc., and maybe they should have had a rate reduction on the 8th of July and blah, blah, blah. But I guess they've got to just be data-driven. And we're only really interested, we're not interested in any particular cohort in the economy.
Yep.
We're only interested in the data to the extent it says that the GDP, inflation and or labour markets are out of whack.
And I think your point is very valid. And the governor acknowledges that there are some people doing it very tough. She, to her credit and to her big credit, like seriously, because she occasionally gets asked at the press conferences and other parliamentary conferences, whatever, there are people hurting. She says, yes, they are. But she says, I can't have interest rates set for young people or for old people at a different rate. And it's a little bit like the state by state breakdown. Victoria should have a rate cut unambiguously. WA, if you were just setting interest rates for WA, probably have a rate hike, to be honest, because they're booming. Alas, it's one interest rate for the whole country. And so this complicates the RBA's job, just by the way, to cut them some slack. They're sitting there and they're hearing from their WA contacts, the house prices are booming and the economy's booming. I can't find workers because the mining sector's doing pretty well and, all of that sort of stuff.
They don't need a rate cut.
And you'd go to Victoria and think, oh, geez, things are tough. The government's sort of screwed up fiscal policy. They're going to hike taxes there and land taxes and property taxes. Oh, geez, Victoria, you need a rate cut. So that's what they're also balancing. It's not just, this macro, all of Australia, GDP, employment and inflation. They hear from different businesses, and even different businesses are doing differently as well, of course. So they're hearing from geographic differences. WA booming, Victoria and Tassie weak, for example. And then they're hearing on an industry basis that housing construction is still going pretty tough at the minute. Retailing and hospitality is pretty tough. So they're hearing from a very different story depending on what you do. Whereas the services sector, health services, booming. That's the one where we've got that incredible growth in government-generated employment. And even if it's private sector, like childcare centres or whatever, it's still the government that's fueling that demand, if you know what I mean. So it's not necessarily a public servant, it's the government
but it's the government's balance
stimulus
sheet
on that. Yep, correct.
So therefore, and we'll come back to see what your prediction is in a second, but therefore, do you think that the whole monetary policy then is a bit of a fiction? Given what you just said.
Look, monetary policy is really important.
I mean the way it's styled. Yes, monetary policy is important. The way we do it at the moment, because given what might be
one
good
rate
for Victoria,
is bad for WA, and what's good for retailing is bad for construction.
Or what's good for an older person is not good for a younger person.
Alas, you've just opened a big can of worms here, Mark.
Which is what I like to do.
You like to do that, I know. That's where government policy comes in. The RBA, let them set interest rates for the macro economy.
So you're now talking about fiscal policy.
We're talking fiscal policy, tax and spending. Where does the government, including state governments, by the way, not just the federal government, where do they raise revenue and where do they spend that revenue? Or
where do they give relief?
So in theory, and this is sort of part of this, I'll talk about the intergenerational one because that's sort of pretty clear to, I think, most people. I'll be blunt. And this is general because old people are doing it tough and some young people are killing it. But in a very broad sense, from the data that we've got, most old superannuants who've got truckloads of money in superannuation who own their house, they don't need any support. They're fine. As we were just saying, a young family, couple of kids, big mortgage, good jobs, so they're doing well. They're the ones that are under financial pressure, let alone someone who's renting, who's got maybe a modest income. They're paying so much more for their goods and services every week, their insurance and their body corporate fees and their rent and food and groceries and all this other stuff. I haven't got much of a pay rise the last couple of years. They're the ones that are under a lot of pressure too, and they tend
and since 2022.
Correct, and they tend to be the younger age cohorts.
So we're nearly three.
But what do you do about? So that's where the government's got to do things like, and look, the what do we call it? That relief on HECS debt, 20% cut in HECS debt the other day. Fair enough. Yeah, I think that was actually helpful.
Well,
you know. And it helps some of those people qualify for a mortgage down the track a little bit. So
Yep.
it's not the worst. Look, it's not the policy that I'd have as number one as the best policy I've ever seen. Far from it. But those sort of things it tends to be young people who've got HECS debt. So it's sort of those sort of things that can tilt the balance. And when you're saying we should be looking after the people who are exposed to the tough economic times and maybe not give so much support to those who are doing fine, it's the governments that do it.
That's the government's job.
Correct. Not the RBA. The
right.
RBA just demonstrates they're on inflation and full employment.
Right.
And that's how it should be.
So the RBA is, you're right, it seems to be correct. Be hawkish based on the data because you've got much better data than you've ever had before.
Yeah.
And government, your job, and by the way, the RBA, not so much this governor, but previous governors have said, the government's fiscal policy is not doing anything to help things.
They have said that in the past, correct.
And I remember, you probably will remember this too, but I don't remember who it was. It might have been either, I don't know if it was Frank Crean or Simon Crean, but one of them was treasurer in the mid-'80s under Hawke.
Yeah.
Would that be?
That would be, I think Frank was Gough Whitlam, and I think Simon might have been in the 80s.
Right. So either one of them,
Yeah.
and I don't remember whether it was Gough's period or whether it was
Hawkey.
Bob Hawke's period. But I remember very distinctly because I had one. People who weren't earning over a certain amount of money who had a mortgage got a tax rebate of the interest paid on their mortgage, and I think it was up to $1,000. And what it was is, so it was means tested.
Yes.
And I was one of the people who got it. I got a tax refund of $1,000, and I remember at the time thinking to myself, "That's a bloody good fiscal policy. That's a great policy," because I was quite interested in economics at the time. But I thought that's very good because I know that I need that. I need that relief
now
because the interest rates were quite high. We're going through an inflationary period, and from both Gough and
back in those days we had double-digit interest rates. I can't, whether it's the 70s or 80s, they were bloody high.
And if you remember, it was off the back of big spending by both those guys.
It was incredible. Yeah,
and that, as we know, and I think you and I have said many times over, governments create inflation by putting money in the system, and for all the good reasons they got to do it. We had to do it during COVID, etc. But you got to do these things, but people will spend it when they got it, and that will create inflation.
You bet we do. Yes.
Because merchants will say, "Wow, they've all got money. I'm going to put my price up because I haven't been able to do it for a long time," and that's what creates inflation. But I remember they had to bring interest rates in to kill it, and that inflation, which they did. And I had a mortgage, and I was one of those people who's, when means tested, was entitled to get. I'm pretty sure it was either $800 or $1,000.
Back in the day, that would have been a sizable amount of money. With all due respect.
And it was, and it was a relief.
Yeah,
it was great when that check came in, mate. It was a big deal for me.
Yeah.
And I just wonder, is that the sort of policy you like the thought of as an economist?
Well, I'll turn it on its head. I don't like first home buyer grants.
No, this was.
But so I'm saying that's the way they try to help first home buyers.
Because that just makes the house prices go up.
Whereas if you've got a mortgage and you're under financial stress and it's qualified, because again, higher interest rates are meant to cool the economy down, but you don't want to
smash everybody.
Smash those most vulnerable, let's just say in the bottom quartile of vulnerability.
That was me.
So look, some people have got a mortgage and they're fine. A lot of mortgage holders are absolutely fine.
Yep.
They took it out years ago. They've paid half it off. They've got a pay rise since, and so they don't need that help.
But means testing will clear them up.
Means testing it is part of the thing. Look, I'd have to think about that a whole lot more, but I don't mind it. I think that there's something in that.
Because
it's a bit like the debt relief issue that we were just talking about for HECS debt. Fair enough, it's good policy, helps some young people reduce their HECS debt and all the rest of it. So a mortgage relief, I'll have to think about that, but I quite like it.
I'm pretty sure it's either Frank or Simon.
I'll go through my old textbooks.
I'd love to know which one it was.
My history books. I've got a whole lot on my shelf at home, years of Hawke and all that crap.
Because it wasn't as if I was one of those people who, like, just about every dollar I earned went to pay for my family or my mortgage. That was it. I wasn't one of those people who was contributing to inflation because I wasn't spending like a drunken sailor because I had nothing left.
Nothing left over.
So I needed that $1,000. And that was a holiday for me. I could take my whole family on a holiday
and do something nice.
Yeah,
which is so important. Yes.
And we'd probably just go down to down to Bateman's Bay or something.
Yeah,
we weren't going on an international
Malua
holiday.
Bay or Mollymook.
Yeah, it was Mollymook actually.
Good old Mollymook.
I
There you
remember
go.
Mollymook.
Oh, I love Mollymook. Yeah.
Put all the kids in the car
See you
and
there at
drive down.
Christmas. That's where we're heading for
I
this Christmas.
I loved it. I
Yeah.
mean, we rented a house or something. I
Yeah,
can't remember
yeah,
what
yeah.
happened, but
Great fun.
But that just I'm just wondering whether that's, and to our audience, that's where the government comes in. Fiscal policy
Yes,
is really important.
to help. And it's even the debate about superannuation now, and without getting into the nitty gritty of taxing unrealised gains, whatever. There are some people who've got bucket loads of money in this super. They don't need another tax break. Now, whether this is the right way to repair it, we'll leave that for another day. But you don't need to add to the generosity to superannuation. I'll put it that way.
Yeah, I agree with that.